nobody builds a business, especially on day one. Like your gym is not going to be what it looks like 5 years later. You're going to add services, you're going to add amenities, your coaching is going to get better. Things are going to get better. And you should not pre-package your rates as if you're never going to get better.
Welcome to the Push Press Podcast,
where gym owners learn to dodge bad advice, crush the competition, and actually make money doing what they love. Let's get after it. Today's episode, coming to you from Orlando, Florida, is sponsored by Foxtail Coffee.
Hey, cheers.
When you've only had 4 hours of sleep and you sat next to a very large person on the airplane, Foxtail Coffee
Clean.
Get you going.
Oh, man.
Anyway, so in the first episode today from Orlando, we're going to talk about something that's near and dear to us, and it's the concept of grandfathering rates.
Yeah, I mean, we see this a fair amount in the fitness industry, right? You start a business, you've got a basic offering, and you got to come up with a price, maybe a little bit of doubt, which we can go into later on. And so you say the dreaded words, I'll give you this for life if you sign up today.
For life is quite a long time.
Woo!
And not only do we see it a lot in the data in Push Press, these grandfathered plans that go on into perpetuity, but we see it in chatter. Like, oh, I've got this grandfather rate and I'm scared to talk to them.
Right. Did you ever do this?
We did at my first gym.
Did you?
And, you know, just like every mentor out there, like learn from the dumb shit we did. Don't do what we did. Trust me, don't do it. Our first gym, the brilliant idea, which, hey, isn't so novel because I'll bet you every gym owner has thought of this, is like, what's our break-even point? It's $7,900. Okay, sell the first 100 memberships at $79 for life.
Like sprint to break even.
Yep.
And then we're good.
And then 5 years later, we had $79 a month members, and our rent had gone up to like $1,100. So figure that out.
Which we'll get into in one of our highlights here in a bit. All right. You want to jump into this one?
Yeah, let's just dive right into the topic. So why grandfathering rates is a dumbass move. Topic one. It just really undervalues you and your growth and what you're doing in your gym. In my opinion, nobody builds a business, especially on day one. Like your gym is not going to be what it looks like 5 years later. You're going to add services, you're going to add amenities, your coaching is going to get better. Things are going to get better. And you should not pre-package your rates as if you're never going to get better.
Yeah, I mean, I think you and I talk a lot about like making sure we have optionality in growth over the long term. No one can see the future. And so if you don't think about like pricing in the lens of how am I giving myself the greatest optionality for where I need to move and shake and go over time, take COVID for an example. No one knew that crap was coming. And so imagine if you had, done steady price increases every single year and you were operating with larger margins that entire time leading up to it. You had a better cushion to weather that storm than if you were, hey, you've been locked in for that $79 and you're running on razor thin margins going up into it. Oh shit, now you lose one person and you're in the red, right? So like it removes all optionality, all flexibility, which to me is like undoes the entire thing.
Yeah. And to this point, it actually creates no incentive for you to get better. Like if you cannot raise your rates on a big chunk of people, why would you put better equipment in the gym? Why would you have your coaches go get better training certifications? Why would you put a sauna or a cold plunge?
That's interesting. Now that you say that, it's like if I know there are gyms that have like every year we do a 3% increase or whatever it is, right? Like that's a thing. And so it just kind of dawned on me, like if you just bake that in.
Oh, it's just so much easier.
Well, not only is it easier, but as a gym owner, you're like, okay, it's January's coming up. I'm going to be asking for 5% more. What did I do this year to get the value that I'm going to be asking for?
Man, you just got me hyped up. Topic change. Why you should bake a 3 to 5% price increase right into your product. I agree, because if you don't have a thing that's pushing you to get better, right? Like, and if you know the price increase is coming, you are going to be driven to always get better. And in my opinion, like that's the only thing that wins in the market is having a better product or service.
Yep.
So why not just build that pressure right into your pricing? That's the way to go.
Yeah.
I changed my topic.
You changed your topic. All right. Moving on.
Number two.
Topic number 2, creates an unfair community dynamic, right? So you have two members, they're side by side, right? John joined when the gym opened. He got your $79 rate, and Sam joined, 2 years later, and he's paying $129. And it's like, what the hell? Like they're going to talk about it, over dinner at the bar, or whatever it is, the community event, and it's just going to build that resentment and everything else, right?
Yeah. Here's a funny point. This is from my history. Like, they're guaranteedly going to talk about it. And you know why? Because you're giving your OG members a brand. Like, you're an OG member. You get this price forever. You're a tier above everyone else. And people carry that badge around with them in the gym. Like, oh no, I'm an OG member. Like, I don't pay that. I don't pay current rates. Like, they will brag to people about the fact that they pay less. So it's going to be advertised.
Yep. Yeah, I mean, I think if you carry that on for too long, so imagine that's, I'm gonna keep going back to your $79 example. You fast forward even a few years later, and maybe now your rates are $159. Now you get to the point where it's like, damn, I got to ask John for an $80 increase, and John doesn't see the value. John knows I'm OG member. I'm worth the $80 a month discount, right? Like, so it gets to a point where you're going to lose John when you do the increase. And you know what I mean?
Yeah. Ultimately, you're creating a ledge that becomes harder to undo every year that goes on.
Yep.
Right.
Yep. Exactly.
Yeah. Number 3, and again, these are all related, and I can tie all these back to my first gym. It hurts your bottom line. So when we raced to the $7,900 break-even mark to pay our rent, which was, the month we did it, we sold that out before we even opened our doors. High five. We will never lose money, but when you fast forward 5 years, you also never will make money. And I know a lot of you gym owners out there feel like you're running a charity. When you create pricing strategies like this, you are setting yourself up to run a charity. So if you have a grandfathered rate that you've promised people you will never increase, and or you feel the pressure that like, oh, I've waited too long and now this increase is going to be tough to do, you're not going to make enough money. And let me explain what happens when you don't make enough money. You start working extra hours. You have to take a second job. You can't pay your coaches enough, so the quality of coaching goes down. The classes experience is less because coaches are unmotivated. It becomes a headwind that creates a downward spiral when you don't have enough money to go around.
100%. I mean, I think ultimately this is true for any business, whether it's a fitness business or even like push press, for example.
Yeah.
At the end of the day, if you're not charging an appropriate value for the services and for the product that you provide, it's going to not allow you to invest back into other areas where you could produce more value for the customer,
Yep.
which is what you're saying, right? So like for the gym, that's like, oh, cool. Old kettlebells are still sitting here that are all scuffed up. And when you swing them, it like tears into your hands,
100%.
right?
It creates a scarcity mindset.
Yep, exactly.
Of everybody in the business.
So if we had done this, we wouldn't have half of the quality talent that we have, right?
I think that's the thing a lot of people don't think about, especially when they're picking vendors, right? Like vendors like us. As you grow, the weight of your business becomes something, every line of code, every class you create, every child care program you launch, everything you do in your business becomes a weight that you have to support.
Mm-hmm.
So if you don't build a mechanism into your business, i.e. you have these grandfather rates, you're creating a future debt problem that is insolvable.
Yep.
Like today at Push Press, we probably have like 10 million lines of code to support. We have like 4 or 5 product lines, and we have hundreds of features, right?
Mm-hmm.
And if we had grandfather rates, and if we had dug ourselves into that corner, like this is something that people don't know. Like we spend $9 million a year on product and engineering people. 9 million, right? Yeah, it's a lot of money, right? And I think it's fair for people to understand that, because it costs money to support the systems that are helping people run their gyms. Same with you guys, gym owners, right? It costs money to have great coaches on the floor to be able to roll out childcare or new programs or build a sauna or whatever. And if you grandfather your rates, you're never going to be able to do that, and the gym down the street will.
Yep, absolutely. Can't see it. Couldn't say it any better. All right, number 4. And again, I know all these things kind of play together, right? But like it really does signal an inferior product. So let's take this. I'm gonna play off what you just said there, right? Where we've got the $79 a rate gym, and maybe I'm the gym owner. Now all of a sudden, because I'm getting less money from Dan, who's paying $79 a month, I can't afford to send my coach to the professional communication seminar that I think would level them up and help them deliver a better service, right? I can't send the other coach to a sales course. And all of a sudden, my product gets inferior. And people see right through this. Whenever you look at pricing, it's either like, whoa, that's expensive, there's some value there, or whoa, that's cheap, something's off.
Mm-hmm.
So it ultimately rings through. Consumers see right through it.
Exactly. The bottom line is there's two types of businesses out there, ones that compete on value or ones that compete on price. And the more you've leaned into a pricing structure that everyone around knows can't last forever, the more you're signaling to the market that you're competing on price, which means ultimately, they're choosing Starbucks over Foxtail coffee.
Ooh. Coffee break. Quick sec.
Foxtail, not competing on price. I guess Starbucks not competing on price either. Starbucks is not competing on price or service or quality. I don't know. They're competing on convenience, I guess.
They're competing on past brand.
Yeah, they're competing on the $82 I have stuck in a bank account with them. So anyway, the point is you're really basically signaling to the market just how inferior everything is that you're doing.
Yep,
and
absolutely.
Not just present, but especially future.
And you're lying to yourself.
You're lying to yourself. That, I think, is the most important topic.
Yeah. Costs are going to rise. Your prices should rise too.
Inflation's a thing.
I mean,
tell me, when we're in a deflationary economy, go ahead and grandfather. That's fine. That's lock it in and just be cool.
Exactly. But even in the service industry where you only have your fixed costs like your rent, and that's only fixed for a certain period of time, right?
Exactly. Yeah.
And sometimes it might be like, hey, you're locked in at this rate for 3 years or whatever, and like, okay, cool, but it's going to go up, and it's probably going to go up by a decent amount when you sign your next lease. So that's going to go up, but again, it may not be every year. Your cost of living wage for your staff, all of that is going up at this point 5% a year, right? So if your two main overheads are going to go up, how the hell are your prices not going to go up? Something's going to give, and that goes back to what you said earlier, where it ends up being your time as the business owner, ends up being your time, your effort, your money. It comes out of someone's pocket,
Yep.
And you're choosing for it to be yours.
Yep, buck stops with you. Yeah, exactly. I mean, unless you have the magic facility where the magic square footage appears for free and you can launch more classes, I don't know, somehow with AI coaches or something, like there is no technologizing yourself out of this cost problem. So you're just lying to yourself and you're lying to your members. Like there is no way you can grandfather them forever. In fact, I speak every week. I talk to a gym owner who hits me up like, I need to raise prices and I'm scared as shit. And it's like, they know they have to do it eventually, but they've lied to it's like, I am confronting this lie that I've given people.
Yep.
It is not sustainable and it is not possible to keep a grandfathered product forever. And my number one rule in business is don't think your customers are stupid. And by telling them that they're grandfathered forever, you're basically assuming that they're stupid.
Yeah. I mean, if you buy into bad pricing, you're buying into a failure.
Yeah. And the thing, like, I want to make sure like this is understood all the way around. It's funny because, like a lot of gym owners right now know, don't grandfather. But you see this advice around the internet a lot. Like, hey, don't grandfather your rates because you're going to face this problem. And then they turn around and buy from vendors who are grandfathering their rates. It's like, I see this double-edged sword a lot.
I think that's because it's perceived as if some companies won't have the same problem, right?
True. Yeah.
But not true at all. Every company, it doesn't matter if it's a tech company like PushPress or, your cable companies, they're behemoths. They do price increases. Why do they do price increases? Because the cost of acting went up and then it trickled all the way down to, cool, CBS cost us a little more or whatever it was, right?
Yeah, the bottom line is if nothing in your supply chain requires a human being, then the prices could go down over time.
Potentially.
But that is not the case in a gym.
Yeah.
It's not even the case in, cable TV because the actors want more money and the producers and the sound people, they all need more money.
Yep.
So
humans, inflation, it's going to hit every company. It's just a matter of time before the team hits a breaking point.
Yeah. And I think there's a lot of people that think, oh, AI is going to come and solve the day, but that's just not true right now.
No.
Because humans still have to be the monkeys running the AI at this point. Like there still are humans involved in, AI creates more scale, but it does not, it just means we're going to do 10 times more things with the same amount of humans or more humans, to be honest.
It's going to increase production. It's not going to necessarily decrease cost.
Yeah.
Right.
Yeah.
So I think that puts a pretty good bow on it. You got anything else, man?
So, hey, if you're out there and you feel like you don't know what to do and you've got grandfathered rates and you need some help on how to unwind that, send us an email, podcast@pushpress.com. Somebody on our podcast team will get back to you, and we got a strategy for getting it undone. So, or if you have experienced grandfathering rates that are a nightmare, or, hey, man, maybe you buck the trend and it's great, podcast@pushpress.com. Let us know. We love to hear from you guys. See ya.
Thanks, guys.
Thanks for listening to another episode of the Push Press Podcast, where we help gym owners, entrepreneurs, and fitness enthusiasts thrive with actionable insights, inspiring stories, and strategies for growth.
Don't forget to follow the show to stay updated on new episodes. And if you're ready for more, join our free Facebook community for gym owners. Check the show notes for the link, and we'll see you next time. Keep raising the bar for your business and community.